Economic data in the spotlight. Hello and welcome to our weekly outlook. In the week ahead, besides the latest earnings report, we mostly have to check the economic calendar where the critical data is due to publish and make it clear how economic recovery is going ahead. And should we still be worried about the inflation or not? Let's check the essential data in the week ahead and the market expectations. Number 1. Chinese retail sales and industrial production, Monday 17. The only leading economy which kept growing through pandemic owes its steady rebound to its better consumer spending. Chinese consumer spending rebounded to its pre-pandemic level. A month ago, Chinese retail sales increased 34.2% and industrial production was 14.1% stronger. We expect to see a 25% increase in retail sales and 10% raise in industrial production. Number 2. RBA Meetings Minutes. Same as the other central banks, RBA also had no change in monetary policy and interest rates. For the coming meetings also, we are not expecting any changes in the interest rates, but it's possible to see start of tapering the asset purchasing in the second half of the year, as RBA already increased the GDP expectation and economic recovery. OC moves in a side movement, steady and above the critical level of 0.77. Any uptrend or downtrend in a long term needs to break out the current range of 0.7655 and 0.7840. Number 3. UK unemployment data, Tuesday 18. From 5.1% unemployment in December, the February rate slipped back to 4.9%. As UK is one of the leading countries in vaccination and reopenings progress, and jobless claims also are falling, the outlook is positive for the UK employment numbers. Now, Cable is looking forward to touch again the February high above 1.4235 after breaking out its latest created range. Number 4. Federal Reserve Meeting Minutes, Wednesday 19. The FOMC minutes should provide the further guidance for 2021 and is essential for the market participant, especially with disappointing employment and inflation numbers. That's why now the FOMC members' outlook and the comments are getting more important for investors. USD index returned to its downtrend. However, 90.30 level is the important level for the future downtrends. The index needs to bridge under that level to confirm deeper numbers, and if the returns back above 91.32 can change the trend again for higher numbers. Number 5. US weekly jobless claims, Thursday. According to the last week's published number, jobless claims fall back to 437K, and 4-week average are also decreased to 534K. We are expecting more decrease in the jobless claim for the week ahead, as already most of Americans are vaccinated and businesses are hiring. Despite the last week's volatility, S&P 500 again returned to its dominated uptrend and looking for its all-time high above 4,245. Positive economic data in the week ahead also are expected to support the trend. Number 6. German and French PMI data, Friday. While the service sector is still under pressure, the manufacturing and industrial sectors are increasing. And now, while the significant part of the German economy locked down until June, it's hard to see too much in the way of an improvement in the May numbers. It's the same for the French numbers as well. And with the latest weakness in the US dollar, euro continuing its gain and holding above the 1.21 level. As the European economy is slowly improving, for the week ahead also with the positive numbers from the Europe, we are expecting to see the February high above 1.2245 for the Euro USD once again. Thanks for watching this video and hope you are having an amazing week ahead.